The stock market is a device for transferring money from the impatient to the patient. Warren Buffett. This insightful quote by the Oracle of Omaha, Warren Buffett, serves as a guiding principle for investors worldwide. Welcome to the fascinating world of stock investing, where patience isn't just a virtue, it's a necessity. A realm where the slow and steady don't just win the race, they also accumulate wealth. You see, the stock market isn't a sprint, it's a marathon, and those who rush often stumble and fall. Now, you may be wondering, why is patience so crucial? Well, it's because the market is, in essence, a reflection of human emotions. It ebbs and flows with our collective sentiments. And as humans, we tend to be impulsive, often making hasty decisions based on fleeting trends or temporary panic. And it's these impulsive decisions that can lead to losses. On the other hand, patient investors capitalize on these very mistakes. They wait, observe, and strike when the iron is hot. They understand that the market is volatile, and they don't let short-term fluctuations shake their resolve. They look beyond the immediate chaos and see the long-term potential. But patience isn't about waiting aimlessly. It's about waiting wisely. It's about continuously learning, analyzing, and making informed decisions. It's about understanding that the market is not a get-rich-quick scheme, but a platform to build wealth over time. Remember, the stock market rewards those who are patient, those who have the ability to withstand the storm and stay the course. It's the patient investor who sees the bigger picture, who understands that Rome wasn't built in a day, and neither is a robust investment portfolio. So the next time you feel the urge to make a hasty decision, take a step back, breathe, and remember Warren Buffett's words. Because in the world of stock investing, patience truly is a virtue. In investing, what is comfortable is rarely profitable. Robert Arnott. This quote hits home for many of us. We all love our comfort zones. They're familiar, predictable, and well, comfortable. But here's the thing. The world of investing is not a comfort zone. It's a battlefield. In the stock market, the status quo won't get you far. To achieve significant returns, you need to step out of your comfort zone, take calculated risks, and venture into uncharted territories. It's like sailing into the unknown, armed only with your knowledge, instincts, and a dash of courage. Sure, the risks are real. The journey may be fraught with market volatility, economic downturns, and unexpected losses. But remember, the potential rewards are just as real. The thrill of discovering a hidden gem, the satisfaction of seeing your investments grow, these are what make the journey worthwhile. Comfort may be cozy, but it rarely leads to wealth. The stock market is filled with individuals who know the price of everything, but the value of nothing. Philip Fisher. This quote by Fisher highlights a fundamental truth about investing. Many people can tell you the price of a stock, but how many can truly articulate its value? Price and value, while often used interchangeably, are not the same thing. The price is the amount you pay for a stock, while the value is what you get in return. Understanding a stock's intrinsic value, its true worth based on an underlying perception of its value, can lead to better investment decisions. Investors who focus on price alone may miss out on excellent opportunities, while those who understand value are able to spot gems in the rough. They can identify companies that are undervalued by the market, presenting potential opportunities for profit. So remember, price is just a number. True investors understand the value. The four most dangerous words in investing are, "This time it's different." So said Sir John Templeton, a titan of the investment world whose wisdom continues to ring true. These words capture an all-too-common pitfall in investing, the belief that the rules of the game have suddenly changed. It's a tempting thought, isn't it? That the old patterns and cycles, the lessons of the past, no longer apply in the face of new technology, a new industry, a new era. But history has a funny way of repeating itself, especially in the stock market. The danger lies in abandoning the principles of sound investing, of getting caught up in the frenzy of the new and the different. It's important to remember that while the players and the scenery may change, the fundamentals of the game remain the same. Speculation and hype may drive short-term trends, but over the long haul, it's the intrinsic value of companies that matters. In investing, those who ignore history are doomed to repeat it. It's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong. George Soros. Wise words from a man who knows a thing or two about investing. You see, successful investing isn't just about making profitable trades, it's also about managing losses. Consider this. You invest in two stocks. One doubles in value, the other halves. You're ecstatic about the first, but the second, it's a punch to the gut. But here's the thing, that's okay. It's part of the game. The key is not to let that loss wipe you out. Cut your losses, learn from them, and move on. It's like a chess game. You can't win with just your queen, no matter how powerful she is. You need your pawns, your rooks, your knights. You need a strategy. You need defense. In investing, defense is just as important as offense. The stock market is a no-called strike game. You don't have to swing at everything. You can wait for your pitch. These words from Warren Buffett encapsulate the essence of patient investing. It's not about making a move at every opportunity, but about waiting for the right one. In the world of baseball, a batter can let a good pitch pass if he's not ready. The same principle applies to the stock market. You don't have to invest in every stock that comes your way. You can wait. You can wait for that perfect pitch, that perfect opportunity that aligns with your investment strategy, your risk tolerance, and your financial goals. Buffett's strategy is not about being the fastest or the most aggressive. It's about being patient. It's about carefully studying the market, understanding the value of different stocks, and making calculated decisions based on that understanding. It's about waiting for the right opportunity, and when that opportunity comes, it's about seizing it with both hands. This approach can be seen in Buffett's own investment history. He doesn't jump at every opportunity. He waits. He waits for the right opportunity. And when it comes, he's ready to make his move. This patience, this ability to wait for the right opportunity, is what sets successful investors apart from the rest. It's what allows them to make the most of the opportunities that come their way. It's what allows them to benefit from the mistakes of their impulsive counterparts. Because, as Buffett puts it, the stock market is a device for transferring money from the impatient to the patient. It's not about making a quick buck. It's about investing wisely with patience and reaping the rewards over the long term. So the next time you're tempted to make a hasty investment decision, remember Buffett's words. Remember that the stock market is a no-called strike game. You don't have to swing at everything. You can wait for your pitch, and when it comes, you'll be ready. In the stock market, patience can be your greatest ally. The more you learn, the more you earn. These wise words from Warren Buffett serve as the guiding light in our journey to understand the intricacies of the stock market. Let's take a moment to reflect on the pearls of wisdom shared throughout this video. We began with Buffett's perspective that the stock market is a device for transferring money from the impatient to the patient. We were reminded that investing is not about immediate gratification, but about the discipline of patience. We then explored Robert Arnott's thought-provoking sentiment that comfort rarely equals profit in investing. This led us to Philip Fisher's distinction between knowing the price of everything, yet understanding the value of nothing. It's a vital distinction that separates the successful investors from the rest. Sir John Templeton warned us against the 4 most dangerous words in investing. This time, it's different. History has a habit of repeating itself, and those who ignore this often pay the price. George Soros emphasized the importance of managing losses, reminding us that it's not about always being right, but about how much you make when you're right and how much you lose when you're wrong. Warren Buffett then guided us back to the power of patience, likening the stock market to a no-called strike game where waiting for the right pitch can make all the difference. Now, as we wrap up our journey, we return to Buffett's wisdom. The more you learn, the more you earn. This isn't just about learning the mechanics of the stock market. It's about learning from our successes, our failures, and constantly seeking knowledge. It's about understanding human nature, adapting to change, and recognizing that the stock market is a reflection of these complex dynamics. So remember, in the vast ocean of investing, never stop learning. Dive into books, Explore the insights of those who have navigated these waters before, and most importantly, learn from your own experiences. Because, in the world of stock investing, knowledge truly is power.